Okay, it seems like everybody has joined. Welcome to all of our watchers today. We're excited to host you once again and to discuss a very important topic for any business, actually for everybody in their personal lives as well, but obviously also for your business, and that is record keeping. So, with us today, we have a veteran in the industry. We have Mpomo Razeroka, and she has over 20 years of experience in HR and financial mentoring, and she's going to walk us through good record keeping today. Maud, thank you so much for joining. We really appreciate it. Before I hand over to you, I just want to remind everybody once again that you are most welcome to drop any questions that you have into the chat. And we also just want to make a quick announcement that we currently have a competition running on our social media to win one of 10 tickets, completely free tickets, to the SAFT Summit, the South African Future Trust Summit, happening next week. So if you haven't entered yet, definitely do so. Ticket full prices usually go for 1.8K. So winning a free ticket is definitely worth it. But back to today's agenda. Thank you so much, Paul, for joining us.
Thank you, Marina. Am I audible?
Yes, you are. I can hear you clearly.
Thank you so much. Thank you, Marina. Good morning, everyone. In regard to today's topic, I'd like to start by saying, in the work that I do, records and good record keeping play a very important role. In terms of records, her records help us unearth root causes of financial problems. Records help us discover financial savings opportunities that wouldn't have known of had we not had records. Records help us ensure that individual and team performance aligns with business objectives and goals. Records provide us information to enable designing structures that support business-specific goals at each stage of the business lifecycle. Records also help us identify talent needs. In terms of record keeping help us track and monitor achievement of goals as well as making informed decisions. We'll move over to our agenda. Sorry, Marina, let me share the screen and move to the agenda.
Can
you see the screen, Marina? Okay, cool. In terms of today's agenda, we'll look at the introduction. We'll also look at records for business and HR at each stage of the business lifecycle. We'll look at the importance of record keeping for business and HR at each stage of the business lifecycle. We'll look at good record keeping as a safety net. We'll look at good record keeping helping prevent mixing finances for both personal and business. We'll look at poor record keeping. We'll look at poor record keeping as silent internal business leak. We'll look at poor record keeping and sphere of control. We'll look at turning weakness into strength. We'll also look at benefits of addressing poor record keeping. We'll look at tips for good record keeping. We'll then conclude. Moving over to the, sorry. I'm not sure what's happening here. Sorry about that. In terms of introduction, stages of business lifecycle provide a framework for understanding how a business evolves from its inception to potential decline, which provide a roadmap for good record keeping, showing what types of information and records are critical at each stage, highlighting the need for different record keeping strategies as the business evolves. The stages of business lifecycle also help HR align its activities and strategies with the company's current stage. It also helps HR create targeted record-keeping strategies that align with the company's current stage. Below, we can see the stages of business life cycle, which is startup or launch, growth or expansion, maturity stage, decline or renewal. By recognizing the current stage, entrepreneurs can anticipate challenges, make informed decisions, and plan for future growth, stability, or decline. In terms of records, what is a record? Anything that is written down and preserved as evidence, that is accounts of events, and includes contracts, invoices, work orders, meeting minutes, purchase orders, emails, photographs, drawing, etc. Businesses of all sizes produce records. As businesses evolve through the stages of the business life cycle, the volume and complexity of records increase due to a greater number of customer transactions, more complex and diverse product offerings, increased regulatory compliance, a growing number of employees, and the need for more sophisticated data to track performance and manage risk. Functions of records is to support data-driven decision-making, to ensure compliance with legal and tax requirements, facilitate business planning and forecasting, and serve as the historical memory for the organization. Continue on records. Records act as a form of communication that can speak about events, decisions, or people, even when they are no longer present. Records from startup stage form the foundation for a business's future growth, providing important data for decision-making, securing funding, and tracking progress. Records are viewed as information assets as they provide valuable information that supports business strategic goals. These information assets, amongst others, include financial records, customer databases, operational manuals, and intellectual property. Sorry, I'm not sure what's it. Okay. My apologies. Going back to the previous slide, I apologize. These information assets make a strong business case for good record keeping. Next. My apologies, my computer is acting out. In terms of records for business and HR at each stage of the business life cycle, we're going to first look at the business focus, which helps us to understand which records are key at each stage of the business life cycle. In terms of the focus on the business side, at startup stage, the business is focusing on establishing a foundation, getting the product or service to market, and attracting initial customers. On the HR side, the focus is hiring the minimum necessary people to get the business off the ground. On the record side for business, it's legal registration, business plan, early sales records, expenses, and basic financial statements to secure funding and demonstrate viability. On the HR side is basic employee files, employment agreements, records, and benefits administration, payroll records, and benefits administration. In terms of volume of records for business is still low because we're at startup stage. Similarly, on the HR side, the volume is still low. In terms of complexity, it's low on the business side and also low on the HR side. As the business grows to the next stage, the focus now focuses on expansion, and the focus for business is rapidly scaling the business to capture market share, increasing revenue, building the brand, and growing customer base. On the HR side is scaling the workforce rapidly and building structure to keep pace with expansion. In terms of records at this stage is detailed sales and customer data, employee records, detailed financial and operational records, and more sophisticated budget to support innovation and growth. On the HR side is updated recruitment pipelines, compensation adjustment records, performance review files, training and development records to support existing employees and new hires. In terms of volume, there will be a change from startup to growth. On the business side, the volume is rapidly increasing. Similarly, on HR side, the volume is also increasing. In terms of complexity, the business side is moderate to high. Similarly, on HR side, moderate to high. Moving over to maturity stage, when the business now is at that stage, the focus of business is stabilizing operations, maintaining market position, managing costs, and defending against competitors. On the HR side is improving productivity, retaining top talent, developing employees for long-term stability, driving performance, and encouraging engagement. In terms of records, on the business side is comprehensive financial statements, market analysis reports, complex contracts, compliance documents, and strategic plans. On the HR side, it's performance management documents, compensation and benefits, training and development, employee relations documents, compliance, succession planning documents, and formal HR policies. In terms of volume for business, it's high to very high because the business has now grown. On the HR side, high as the workforce is large and stable. In terms of complexity of records, it's high for both business and HR. If the business is not doing well and now is declining or thinking of pivoting, the business now focuses on cost reduction, restructuring, and managing exit. In terms of HR, at this stage, the focus of HR is managing workforce transitions and supporting business reinvention efforts. In terms of records, on the business side is financial data focused on cost control, asset liquidation, and strategic decisions about the future of the business. On the HR side is severance and outplacement records, records for retirement or redundancy, and documents for managing a smaller workforce. In terms of volume, the volume on the business side is decreasing. On the HR side is moderate with potential increase during restructuring. In terms of complexity for business, is high with focus on disposition of records. On the HR side is high due to complexity of change management. Moving over now to record keeping. Good business record keeping is not a one-size-fits-all solution. It must be adapted to a business lifecycle stage, which progresses through startup or launch, growth or expansion, maturity, and decline or renewal stages. Good business record keeping provides a strong and stable foundation for business growth and success. Good business record keeping is also important at every stage of the business life cycle for securing funding, cash flow management, monitoring business performance, legal and tax compliance, improved efficiency, and better decision-making. Good business record keeping involves creating and maintaining records that are accurate, clear, timely, and protect against risk. Good business record keeping enables businesses to manage large volumes of information effectively by providing structured and organized data for smooth running of the business. On the HR side, good HR record keeping provides accurate data for better decision-making, ensuring legal and regulatory compliance, and streamlining HR activities to enable the business to achieve its goals. At this point, if I can just talk about monitoring business performance and just to demonstrate or to see how good record keeping helps the company or business with regard to monitoring business. At startup stage, the good records provide the data needed to track progress against business goals, evaluate business goals, evaluate the success of the strategies, monitor income and expenses, and see what's working and not working. Moving over to the growth stage, monitoring business performance. On the business side, records help in monitoring processes and activities across different departments. Becomes more manageable with records, providing a clear picture of how the business functions. On the maturity side, records provides data for performance analysis, risk management, and strategic decision-making, allowing leaders to identify opportunities for reinvention or innovation and maintain profitability. On the decline stage, analyzing financial records can reveal which products or services are no longer profitable, while customer records can highlight reasons for declining interest or provide insights into niche markets that still value the product. So we can look at good record keeping at the helicopter level, but we can also drill down to specifics to indicate how it helps the business. Like, for an example, what I've just indicated in terms of monitoring business, you can also look at it in terms of cash flow management at each stage, because every business needs to manage cash flow, whether you're at startup or decline. Records will provide information to be utilized where the business is in terms of the business life cycle. Okay, next. We're going to look at good record keeping for business and HR at each stage of business life cycle. The importance of good record keeping on the business side is accurate records help a new business secure funding by showing lenders and investors a clear finance picture. Good records are also important for establishing a budget and making important spending decisions. On the HR side, good record keeping, it's establishing good records early to prevent future problems like lawsuits, reputational damage, and high employee turnover as the company scales. In terms of record keeping system at startup, is simple for the business, organized filing system, physically or digital, or any basic software. On the HR side, is simple filing system, either paper-based or shared drive. One can understand that they don't use, at startup, you don't use sophisticated record keeping system when the company is still trying to build itself. On the growth stage, the importance of good record keeping for business. Good records are needed to forecast future cash needs and manage increasing complexity in transactions. Accurate records are also important for making informed decisions about expansion, resource allocation, and scaling operations. On the HR side, good record keeping supports strategic planning, ensure legal compliance as the business scales, and helps in managing workforce. In terms of record keeping system at this stage, on the business side, is sophisticated record keeping system to handle the increase in volume and complexity. On the HR side, is transitioning to a detailed, comprehensive human resources information system for better organization and accessibility. Moving over to the maturity stage, the importance of good record keeping on the business side. Good record keeping provides data needed to maintain profitability, optimize operations, and monitor performance against industry standards to maintain competitive edge. On the HR side, importance of good record keeping. Good record keeping is important for maintaining legal compliance, managing a large and stable workforce, supporting strategic planning with data and talent retention. In terms of record keeping system, on the business side, is establishing a robust system to secure sensitive data to ensure compliance. On the HR side, is robust human resource information system with audit trails and secure data management. On the decline or renewal side, the importance of record keeping is detailed and accurate records are important for quickly identifying inefficiencies, cutting costs, and making strategic decisions to either turn the business around or manage its wind down. On the HR side, good record keeping is important for managing workforce reduction, ensuring legal compliance, and smooth transition for departing employees. In terms of record keeping on the business side, transitioning to secure long-term storage and final disposition. On the HR side, the system remained robust, but focused on compliance and archiving than growth. Okay, our next slide, good record keeping as a safety net. I think many small, medium enterprise owners can relate to this. Many small, medium enterprise owners may wear multiple hats or fulfill multiple roles, bottom to top, top to bottom level, before getting an opportunity to hire employees to delegate some of the responsibilities. In management levels, we say operating from first line supervisor to top management level and top management level to first line supervisor level. So you operate, you have to do daily, day-to-day activities and also do strategic things and also be a middle management because you don't have anyone yet to delegate to. So in the absence of anyone to ask or refer to, this can be very challenging to run the affairs of the business efficiently. In this regard, good record keeping acts as a safety net for small, medium enterprise owners. Let's look at the benefits of good record keeping as a safety net. Benefits of good record keeping as a safety net. Records gather important data. Even without employees, records provide comprehensive overview of operational activities, which is important for monitoring business health and growth, and can help attract investors and lenders. Records ensure financial health. Detailed records allow owners to accurately track income and expenses, identify profitable areas, and understand their cash flow. This financial transparency prevents cash flow problems and provides a clear picture of the business's financial performance. In terms of supporting strategic growth, proper records provide data needed for smart planning and decision-making. Records help owners identify waste and make data-driven choices to steer the business towards growth and success. In terms of simplifying compliance, maintaining records is important for accurately paying taxes on time and avoiding penalties. Minimizing risks, good records help avoid legal penalties, fraud, and theft by providing a clear audit trail of all financial transactions. Accurate records can prove that business is compliant with regulations and laws, protecting it from future challenges or investigations. Records also protects against litigation. Having clear records can provide evidence of decisions and actions taken, which can be critical in resolving and preventing disputes and lawsuits. So these are the benefits in the absence of anyone when you don't have resources yet to bring people or employees on board. These are the benefits that good record keeping can do for the owners. The trick is the records must also be accurate for them to work or for the owner to benefit from them. Next one, we look at, this is my favorite slide. Good record keeping help prevent mixing business and personal finances. With regard to separate accounts, using separate bank accounts and credit cards for business transactions create a clear, traceable history, making it easy to distinguish business from personal funds. All business income should go into a separate business bank account, and all business expenses should be paid from it. The owner can then pay his or her salary from this account into his or her personal account. In terms of tracking profitability, How is good record keeping helping us in this regard? The separation between business and personal helps the owner to track the business's true profitability versus owner's personal spending. In terms of accurate reporting, well-kept records prevent errors in financial reporting, ensuring that the true profitability and cash flow of the business are accurately reflected. Good record keeping also helps in making informed decisions. Knowing the true financial performance allows the owner to make informed and effective business decisions. The owner should also pay herself or himself as the owner. Determine a consistent, reasonable salary for the role you perform in the business. Earning the salary from the business account, then pay it into your personal account. In that way, there won't be any challenges when reporting has to be done. With separate finances, small, medium enterprise owners can set and track their personal financial goals separate from business financial goals. They can track and monitor their actual personal spend against their personal budgets. They can manage their personal cash flow, that is money they've earned or money coming into their finances versus money they've spent, that is money going out of their finances on the monthly basis. They can conduct spend analysis to see where they have spent their personal funds, on what, why, where, and how. They can also be able to track progress in what I call debottlenecking or repaying their personal debts. They can also track progress in generation and growing their personal financial savings. I also say use the power of transferable skills. If you're already doing it on the business side, organizing your finances, attention to details in terms of how you use your finances through record keeping, you can also do it the same way for your personal finances or for your personal affairs. Next slide. We're going to look at poor record keeping. Poor record keeping is the improper maintenance of documents and information and includes missing records, data gaps, leading to difficulty in locating needed files, which in turn can expose a business to legal penalties and reputational damage. The missing records can be receipts or invoices, contracts, employee files, meeting minutes, licenses or permits, inventory records, internal reports, or promotional materials. Poor record keeping can lead to financial loss, wasted time with employees looking for missing invoices or missing reports. It can also lead to reduced productivity in that regard as well, and poor decision making. Record keeping can be an internal weakness for small, medium enterprises, hindering their ability to manage their finances, attract investment, and make informed strategic decisions to grow and succeed. Poor record keeping can be a silent internal business leak. A silent internal business leak is like a hidden inefficiency, e.g., poor record keeping, a cost that reduces business profits known as profit leaks. A profit leak can be unbilled services that are provided but never make it onto invoice due to poor record keeping, leading to direct revenue loss. Poor record keeping as a silent internal business leak is like a slow drip of water through a hidden crack, quietly and gradually draining business resources, time, and profit without triggering any alarms. A silent internal business leak, that is a poor record keeping, leads to financial loss, as indicated earlier, difficulty securing funding, legal liabilities, wasted time, operational chaos, and damages the business's reputation, all without an immediate and obvious cause. Think of a situation where you are continuously looking for a document that is important and you have SARS at your door, you can't find those invoices, and SARS is looking for those documents for you to be able to process your tax obligations. It can really, really be stressful. A silent internal business leak is an internal weakness than an external threat. In this regard, some businesses don't fail due to competition, but because of hidden internal flaws that could have been prevented. Let's look at poor record keeping and sphere of control. The sphere of control is about internal factors that the business can control, which is strengths and weaknesses, as well as external factors that the business cannot control, that are opportunities and threats, as indicated in the block here. So what is internal, the business can control. What is external, business cannot control. While at this point, I also need to mention, I spoke about SARS earlier on. Running a business, it means we are running within a governed and regulated environment. And that is why those compliance requests from government authorities. And that compliance falls under external factors that we cannot control. If we have to conduct SWOT analysis, as I indicated in these 4 blocks, poor record keeping would be shown in the weaknesses quadrant, as indicated here. In this regard, poor record keeping is an internal factor. Here under sphere of control, a weakness in the sphere of business control, and should be addressed before becoming a cost and draining the resources of the business. Poor record keeping is like a low-hanging fruit, easy to pick or address with minimal effort, and provides quick rewards. With less, if we manage to address poor record keeping with less internal weaknesses and more internal strength, that is improved record keeping, small, medium enterprises can be able to pursue more external opportunities and leverage their internal strength to address identified external threats. Let's look at turning weakness into strength. It is critical to understand and address the causes of poor record keeping to enable the business reduce or eliminate the costs of poor record keeping. Turning poor record keeping, a weakness, into a strength helps improve performance, increase revenue, and stay competitive in the market. Now, if we talk about an invoice that is lost, a contract that we cannot find, in that regard, we cannot enforce collection of those that are owing us because we don't have a contract that we can refer to those clauses to say if they pay after so many days, then we need to institute an interest. But because we don't have that contract and we can't find it on time, the revenue that we could be getting from the customers where we provided product or services, we don't get, or we don't get on time. Looking at the steps to turn weakness into strength, we first have to identify the weaknesses that are factors that are hindering the business's performance. In this instance, I've identified poor record keeping. Secondly, we need to understand the root cause of the weakness. This helps to develop a strategy that can address the root causes and turn the weakness into strength. Thirdly, we need to develop a strategy to address the cause of the weakness. The strategy must be smart, it must be specific, measurable, achievable, relevant, and time-bound. Fourthly, we need to implement the strategy. We need to execute the plan and monitor progress to identify any gaps and make necessary changes to the strategy. Fifthly, we need to evaluate the results to determine if the strategy achieved the desired results. If the strategy was successful, it can be replicated in other areas of the business to turn the weaknesses into strength. The strategy to turn the weakness into strength will demonstrate to the investors and/or lenders how the business intends to use the funding needed to address the identified weakness. The strategy can include benefits of improving poor record keeping, which is better financial management and improved decision making. Moving over to the next slide, looking at benefits of addressing poor record keeping. Addressing poor record keeping, it will help to improve operational efficiency. When records are organized and easy to find, it reduces the time spent on retrieval and increase overall productivity. It also enhances decision making. Accurate and complete records provide reliable foundation for making better strategic and operational decisions. It ensures legal and regulatory compliance. Good record keeping helps businesses meet legal, tax, and regulatory requirements and avoid penalties and fines. It increases security. Proper record keeping, including storage and retention policies, is important for protecting sensitive information. It also boosts financial health. Businesses can better manage their finances, understand their cash flow, identify areas for improvement with a clear and accurate record of financial data. Looking at tips for good record keeping. First, you need to develop a good record keeping system. If we go back to those stages of business lifecycle, at each stage, you saw that we've got different record keeping systems depending on where the company is in the stages of business lifecycle. So developing a clear, good record keeping system, develop a clear filing strategy for organizing and categorizing, such as labeling by folders by year, month, and type of record, whether digital or physically. Implement digital record keeping, embrace digital solutions to store and organize records, as digital files are easier to search, retrieve, backup, access than paper record keeping. You need to establish clear policies and procedures, develop standardized guidelines for document creation, storage, retrieval to ensure consistency. Regularly update and review your records. Keep records current and perform periodic reviews to identify correct inaccuracies. Also, regularly review and update your records to ensure they remain accurate, complete, and up to date. Training employees. Ensure all employees understand the importance of proper record keeping and are trained on the established procedures. Prioritizing data security. Implement robust security measures to protect digital and physical records from unauthorized access and breaches. Seek expert or professional help. You can consult with an accountant or bookkeeper to develop a tailored record-keeping system, and also for them to help you with ongoing guidance on compliance. You need to create backups for your files. You need to regularly back up electronic records to prevent data loss due to system failures or disasters. At this point, I just want to quickly share past experiences where I felt that good record keeping really showed its value. First, I want to talk about the period when I was a trustee in our community scheme with some other trustees. So what we did on a monthly basis, we tracked and monitored collection of levies. And on a monthly basis, because of that practice, we collected 95 to 97% of the monthly levies. We also tracked and monitored our spend to make sure that we don't overspend, leading to problems with the cash flow. And we also monitored and tracked our savings to make sure that our savings is growing. With those three practices, collection, spending, and generation of savings, it was through good record keeping that we managed for 2 years in a row to give zero increase to the monthly levies that were billed to the owners. Because based on the records, we could see that we can manage to diversify our savings and we can also afford to give zero increase for 2 years in a row. Had it not been that good record keeping, tracking, and monitoring, I don't think we would have been able to make that decision. We would have loved to make that decision, but even if maybe we had made that decision, we would have made it blindly without any data supporting our decision. But because of the record keeping, we could back up the decision of why implementing a zero increase to give owners temporary financial relief. The second past experience that I want to talk about, when I was working for one of the big companies in our country, I was still alone in the department before I got assistance. And we were still using paper leave forms while we were still transitioning to electronic leave application. And during December, between Christmas and New Year, every employee had to complete a leave form because the company was closing offices at the time. The following year, the second week of January, the accountant and the auditor comes to my office and they say, we are here, we'd like to check if all employees who went on leave in December completed leave forms, and those leave forms were processed. And I said, sure. And the auditor had a list of employees, and the first name randomly chosen was my name. I could see the face of the accountant saying, okay. And then she immediately said to the auditor, that's her. And he said, yes, that's good. It's good that we start with her. And I went to my files, got my leave form. The leave form was signed, and the auditor went to the next level and said, under the name and signature of line manager, he said to the accountant, do you know this signature? And she said, yes, that's her line manager based in London. And then he went to the next level and said, okay, now I want to see if this leave form was processed by payroll before everyone went on leave. So I took out a record with a stamp from payroll that they've received all the leave forms that were submitted for employees that went on leave. So in that case, had I not had that record, it was going to create a lot of suspicion to the auditor. And I think a lot of things were going to be stopped until I find a proof that leave forms were submitted to payroll, because he wanted to know that, yes, you have them in your file, but were they processed by payroll before employees went on leave? And luckily, I had that record from payroll with a stamp of receipt of all those records, of all those leave forms that they were received and processed. So I'm just trying to emphasize that good record keeping, especially when you are alone, can really, really, really help a lot. Okay, I think, if I'm not mistaken, in conclusion, what I would like to say is, as small, medium enterprise owners, we need to view records not just as compliance task, but as a vital business asset that supports strategic objectives. We need to maintain meticulous financial and operational records to monitor performance and make informed decisions. We need to keep accurate records to stay compliant and protect our businesses from legal and financial penalties. We need to use records to understand our business's financial health and to support business growth and strategic planning. Furthermore, instead of being valueless, good record keeping is an important practice that provides us with tangible benefits across all aspects of the business, from daily operations to long-term strategy. In this regard, long-term benefits of good record keeping should outweigh any short-term reasons for poor record keeping. A hole in the business record keeping system is not just an inconvenience, it is a strategic liability that can erode the stability and long-term success of a business. Good record keeping helps us to be prepared for an opportunity. Good record keeping also contributes immensely towards business growth and success. Marina, that's where I conclude. But maybe lastly, before I say to say my last word, I just want to say Thank you to the team of SME Advice. I want to say thank you to Tsepo, who convinced me to do this webinar. I want to say thank you to Karabo, who worked with me up until this webinar happens. And I want to say thank you to Marina helping me to make sure that the T's are T'd and those I's are dotted. Thank you so much.
Thank you so, so much, boy. Yes, definitely all of the I's are dotted and the T's are crossed. And I think it's definitely valuable to understand that record keeping can be that leaky pipe that not only causes losses, but can erode an entire business. And then you have to start from scratch again, causing additional costs, to get it fixed. So, starting off with some of the questions, the first question we have here is that if I never kept good records before, where do I start?
That's a good question. And I like it when you say when if I didn't have good record keeping. What I usually say to people when I do financial mentoring, get those receipts, put them on the table, start putting them by date. We have to start somewhere. You have to start somewhere because, unfortunately, as I said earlier on, as businesses, we operate in governed and regulated environment, which is an external environment that we don't have control of. So we need to make sure that we are ready to comply. So if you didn't have good record keeping, we have to start somewhere, put them on the table, pack them by months or years. You're starting from somewhere. It's not going to be perfect, but as you go along, the challenge is as you get more customers, it becomes tricky to keep track as to who paid, who hasn't paid, and you may lose a lot of money. So it's just to start, put them on a table, put them by months, by years, but you know that now you're building something for going forward.
That's very good advice. So what would you recommend that a business always tries to have digital copies or hard copies or a little bit of both when keeping good records?
I think, Marina, as I indicated in my earlier in the presentation, depending on where you are, I would not expect a company that is a startup which is still looking to build itself to have enough finance to have a robust, sophisticated record keeping system. Paper, at the end of the day, you may have your paper, you may record on your spreadsheet, but somewhere in a folder, whether it's paper or that folder on your computer, at least there is some record that you're keeping. Because depending on where you are, companies that are already at growth and maturity, they are already well established. They've got funding to bring in those sophisticated record keeping system. With us small businesses, we start somewhere. We start with that paper. If we can manage to have that save on shared drive, we do that. And as the business grows, at least we can look back. We have something that we've built. We built on that as the business grows. So at the beginning, when the business is still starting, yes, paper. The issue is at least make sure that your records are kept.
Keeping records is better than no records at all.
Correct.
Totally, totally hear you then, Paul.
Correct.
So another thing that we also saw from our poll that we put out earlier is that many business owners find that they are business owners who wear many hats, as you
Yes.
also alluded to.
Yes.
Where do we find the time to set time aside and focus on the record keeping side of our business, whether it's for general financial duties or even for our HR responsibilities?
Yeah, I actually came across um those are the causes. Those are the causes for poor record keeping. However, the question that I ask myself without even asking someone else is what is very sad is that yes, I may not have time to do that record keeping now, but when that authority comes, it takes so much of my time that now I have to run around and get those receipts and all of that, which now takes away my focus away from my business into this little paper that they are looking for because I'm not balancing, my books are not balancing. So what I'm saying is that let's, as I said in my conclusion, let's rather do it for ourselves first and make sure, because at some point there is an authority that will come and look for these records, and it's such a create chaos and a waste of time at that point where you now have to move your focus from what you should be focusing on to grow your business, and now you have to spend time looking for these records. So I'm saying, as I indicated to some of the people when I do financial mentoring, put them in a plastic. When you don't have time at the time, put them in a plastic, but please have some dedicated time, because at some point one department of government will definitely require them. And even if I can try to explain to them and say, guys, I'm trying to build business here, they're going to say, you're not complying. And that may cost me financially as a business. So it is that it's weighing the pain that you feel now versus the pain that you feel later. But as I said in one of the statements in my conclusion, the reasons for poor record keeping should be outweighed by the benefits of it. So that 1 hour, 2 hours, I know we're wearing different hats and many hats, but record keeping is one of those that unfortunately we need to give attention to, because we don't have control of those compliance requirements.
That's very important. Just a quick note to our participants who have raised their hands, please share your questions in the chat and then we can read it out loud for everybody to hear and benefit from, please. Thank you. So another question we have here, Mbo, is what is your advice with regarding to ensuring that wet records are kept safe? So obviously cybersecurity, all of that is very important for us, especially keeping it in the cloud. Is keeping your records in a Google Drive or something enough to keep it safe? Or what other recommendations do you have?
Uh, Marina, as I said earlier, it depends where you are, because can you afford to, for these other systems, if you can't afford, we go for what you can afford. I mean, in the olden days, we used to put records in a cabinet and lock it. That is the cheapest, if I can use that word underlined, or inverted comma, is the cheapest, because that's where I am. At least I have locked them, and access to those records. Either I have a register, so that I can keep a register as to who has accessed that cabinet for whatever records before I can be able to go to sophisticated digital record keeping system. However, I also say, not being an expert in that field, I would also say, if you, as I indicated in one of the points that I indicated, talking to an accountant or bookkeeper, they should be able to help you with the best record keeping for where you are. Because to implement a system that you cannot afford on a monthly basis, it's also going to drain your finances. So, as indicated in that point, to say they will tailor made to your environment. So, yes, you can go digital, but it should be a system that you can also be able to afford every on a monthly basis. But if there are other digital systems that can be used, I think people in those areas should be able to would be in the best position to say which digital environments are safe. I don't want to start saying things that are incorrect in terms of cybersecurity and things like that. But I think contacting relevant experts should be able to help. But I think take into account where you are with your business. Use what you have until you have grown that you can afford to go to sophisticated systems.
Yes. I think that is an excellent point you are raising there, Paul, that an expert in the field of accounting, etc., and financial management can be very valuable in guiding you in finding the tools that's right for your business. But then again, when it comes to cloud security, cybersecurity, all of those aspects, then it maybe adds more to the expertise of individuals with that background in cybersecurity etc. That's an excellent point. Thank you for sharing. So, we're closing questions right now. Our time is almost up. Lastly, once again, I just want to thank everybody for joining. If we didn't get to your question, you can share it with us on our social media, and we will definitely try and get it to Mpo, get some feedback. But she is also one of our SME advice experts, meaning that you can reach out to her on the SME advice platform and book a session with her. Our team will be sharing a post webinar email with everybody just to ensure that you have all the details of how to reach Mpo and how to book a session if you'd like to do so. Thank you once again, Paul. This was extremely insightful and definitely so important. Um, if I see all the hand clapping and all the engagement, that definitely, thank you, everyone. That definitely proves the value for today. If anybody joined late, as always, our webinars are still available on our platform or our YouTube channel if you prefer reaching out on that side. So you don't have any reason to worry that you missed today. And then lastly, just a quick reminder to check out our social media competition on our social media platforms. Thank you so much. Bye.
Thank you. Bye.